All our 6 panelists here are invited to explore with us their views on the potential blockages to participation, their nature, from their own perspectives. We will focus mostly on European regulatory process, and we'll discuss also proposals that they might have or they might take from the research to unblock participation. So my first question to panelists, moving straight forward, my first question to panelists, and maybe we can start with Monique, will be, what is today your analysis of the situation? What do you see as the main blocking factors for the participation of the public and in particular consumers?
Good morning, ladies and gentlemen. I'm delighted to be participating at this Finance Watch conference, and certainly public interest in policy making, be it in the financial sector or in any other sector, is at the core of our work. I'm representing the BEUC, which is the Federation of Consumer Organizations in Europe. Before I try to answer your question, just a general remark. I think that public interest or public interest participation in decision-making, it's not only about ticking a democracy box, it's also about improving the content of legislation, because every time you are able as a civil society representative to provide constructive input into a legislation, you participate to its improvement. And it is also very important because it is about engaging people, and Europe needs engaging with people. You know, the whole post-truth politics and the EU bashing that is going on now is because citizens feel depossessed by the European Union. So if you can increase engagement of their people and civil society representatives, that's certainly something that is good. I would also like to say that some of the blocking points that you have mentioned in the very, very interesting and good research that you have done, it's about increased transparency and outreach by the Commission, and this has taken place. There have been improvements, indeed, in the transparency register, in the agenda of the commissioners. It's thanks to the publication of the agenda of Commissioner Dombrovskis that we are able to see that he doesn't accept to meet us, but that he meets quite a lot of industry representatives. So we can remind him on Twitter that maybe he should balance a little bit the people that he meets. So this is good. Now, in terms of blocking, I would say, and this is maybe trivial, but it's just at the core of everything, it's resources. If you are serious as a policymaker about participation of civil society in decision-making, you just don't have to say, the door is open, just come in. You have to provide adequate resources. Otherwise, it's only lip service. When you look at the way experts are being resourced for expert groups, sometimes you have reimbursement of travel costs, sometimes not. And if you have reimbursement of travel costs, it's like you just go, third class in the train or something like that, and you go into a hostel rather than to a hotel in Brussels. So this is already something that has to be addressed. But beyond reimbursement of the cost, it's the time that you as an expert need to take to prepare the meeting, to prepare your analysis and to contribute to the meeting and the follow-up of the meeting that is not being paid. Now, it's like always complaining, but I can assure you this is the core of the matter. Industry always finds the money to participate. And it is one of the main reasons why, even if we have the right to participate in some groups, we cannot participate just because we cannot be relevant. And our motto is better absent than irrelevant, because then otherwise we then legitimate a process where we cannot provide the input that we should give. So this is for us key. And this is even more key in another aspect, and I'm not sure that the research has addressed it. Maybe it has, I have not read into detail. What we see is that there is not only an imbalance between, let's say, private interests that are represented in expert group, which is okay, they can be represented, it's legitimate, and public interest, but also we see, can I say still, it's not politically correct, an East-West imbalance. We see that most of the expert groups demonstrate an imbalance towards Western, North European countries, and the other countries cannot participate because the resources there are even lower than the resources in the former countries. And that means that policy making in Europe reflects maybe the specific needs of those in Northwest Europe and does not take into account the other ones. This is the only thing I would like to say as a warming up. remark.
Thank you, Monique. And indeed, the difference between East and West and the imbalance is not specifically mentioned, even though we highlighted the fact, based on what we heard in the workshops in particular, that without proper resources, without funding, it makes it even more difficult for those who are distant from Brussels to join. Thank you for these points. I would like to invite Magda, maybe to continue and explain from her point of view, and the point of view of your organization and research.
Hi, I'm Magda Tancau, and today I have a double head. I represent the European Anti-Poverty Network, but also I'm here to present research that has been carried out on, let's say, more or less a similar topic within a European funded project, which is called FESSUD, that stands for Financialization, Economy, Society, and Sustainable Development. You are very welcome to visit the website. The project has just come to an end. The website is www.fessud.eu. Actually, the results of this research that involved marginal representatives of marginalized groups talks about blockages in the participation process. So I will try to focus on three main themes that emerged from this participative research. And the main idea behind this is that we've heard all this talk about banks for people. We've heard a lot of concern with financial inclusion and participation in different processes of governance or of regulation. But I think there is very little effort invested and very few resources invested in finding out what is the view of the people. You want to create a bank that works for people, but what is their view on that? And here I don't talk about the view of organized professional civil society, but people who come especially from marginalized groups. So the three main themes that emerged from this participative research with the marginalized are, well, first of all, that financial inclusion always happens on banks' terms. So people feel overwhelmed by the power that banks have over their lives, and engaging in a relationship with banks has a tremendous negative impact on their emotional and material well-being. We found out through this research that the engagement of marginalized groups with finance is rather infrequent, it's uneasy, and it's driven by attempts to complement insufficient wage income generated by temporary work and the erosion of welfare provision. So actually what is happening nowadays in our societies is that people turn or shifted from welfare to debt-fare. In order to meet daily needs, they have to take loans from the banks. So you can see this proves that the banks have a very important role in people's lives. There is a huge lack of trust in banks, and the state plays an important role in forging or sustaining the links between citizens and the banking sector. I think the report that is the center of the conference today talks about the fact that we all need banks. Well, actually, it's not just that we all need banks and that we all have bank accounts, but from the point of view of the marginalized, they feel that the state forces them to have to engage with finance, to have a bank account in order to benefit, in order to receive their social benefits or their pension. So this is not a free relationship where they are able to set any conditions or to set their own terms, but they are being forced by the state, who, by the way, should protect its citizens. This, of course, fails to create a sense of empowerment. On the contrary, and also the report talks about a very depersonalized relationship with the banks. So if you want to have banks for people, this relationship needs to be a bit more personal, and people should have the possibility to give their own views on this. Then there is a lot of talk about participation in finance and engagement with finance, but what we discovered through this is that actually financial participation is regarded as a disempowering experience and not as an empowering experience. And I think this has a lot to say for the policy recommendations that you want to put forward, because in order to foster participation, to enhance participation, you need to empower different categories of groups that make the public that you are talking about. We have learned that finance has become increasingly important, and its influence has become more and more visible in our societies through the credit crunch, through bailouts, recession, and the ensuing austerity. But there is very little space for the general public, and especially for the marginalized groups, to participate in debates about governance and regulation processes, which represent a reason for not trusting the banks and for feeling overwhelmed by them. But we didn't, the purpose of this research was not to describe the marginalized groups as powerless victims of the relationship with the finance sector. We have also found out that these people can be agents of change. They can be part of this change process, and they have the capacity to participate. The first step in order to do that is to overcome the individual status of consumers and become empowered citizens that have the knowledge and have access to resources and to means of action. And I think that here our findings back very much up your findings in the report, the need for organization and for collective movement. I will stop here. I hope I did.
Thank you. So I think we have here two quite different perspectives, still talking about people at end users of banking services. I would like now to give the floor to Eric Ducoulombier, if I may. If you can give us the perspective from the European Commission as the head of unit in charge of stakeholder involvement in particular.
Thank you. Thank you very much, Aline, and thank you very much to Finance Watch for this invitation. I'm very happy to be here to give you the insight from the Commission, from DG FISMA, which is in charge of financial market and financial services in the Commission. So I would say that the problems which are faced by the civil society are not new. They've been identified for many years. And they are pretty well analyzed in this excellent research paper that you are disclosing today. So these problems are, the low resources, financial resources, which they have, and this is something that Monique next to me just highlighted, and that's probably the most crucial problem. Also, the complexity of the texts that are adopted by the EU institutions. This is in itself an obstacle to the civil society to really take its normal and fair share in the discussion. Also, the complexity of processes, and this has not improved in the recent years with the emergence of what is called level 2, where many of our rules are enacted based on technical standards prepared by the European supervisory authorities. So this has added layers of complexity in the process itself, and I know it's not easy to understand and play a full role in this process. Also, there is an information asymmetry. This is very clear. And last but not least, what is called civil society is a very heterogeneous concept where interests are not necessarily converging, whereas in financial services you would have much more homogeneity in the interest pursued. So all these problems they are known, and we in the Commission we have tried very hard to remedy this, and Monique next to me said it has improved, but we are not fully there yet. I fully admit this. That being said, I would not like people in this room to have the impression that the dominance of the banks in this process, in this ball game, if you want, is blocking the access of civil society. It's not as if there were, hundreds of civil society representatives queuing outside our offices and not being able to have access because of the banks already being there. This is not at all what's happening. I hope so. Yes, but I want to make it very clear. That being said, there are some structural imbalances. This is true, and this is what we are all trying to remedy. So what do we do? I'll be very quick, but of course I'm here to answer questions. What do we do? Resources. We mentioned resources. This is key. Le nerf de la guerre, as we say in French. So we are, and maybe not everyone here knows that, we are giving some very substantial financial support to the BEUC, to my right, but less than their budget comes from the European Commission. That needs to be stressed. We've also proposed a program to finance over 4 years Finance Watch and Better Finance. And the sum we are talking about is not negligible. It's 6 million euros for 4 years. Okay, you may say, compared with the firing power of the banks, this is peanuts, maybe, but nevertheless, these are important sums which, again, help, we hope, help or will help these organizations to be more and better equipped to play their essential role in the process. We have created structures. We've created a financial services users group of 20 people, which was created in 2010, which replaced another similar group which we had created. And I was, in fact, at the origin of this creation many years ago. And this group, which is about to be renewed, if you want, has, let's say, provided us with very important and crucial inputs on our proposed legislation. And we are very much looking forward to this new financial services user group resuming its activities as soon as possible. But there have been some difficulties caused by the fact that we can no longer finance, in the way we can no longer pay these experts for attending and participating to Commission's expert groups. And this ban, of course, hits much harder the civil society organizations. This is not us, DG FISMA, having decided this. This is a Commission-wide policy, and we are the first one to be sorry about that. And we hope that in spite of this, we will be able to attract top-class experts from the civil society to sit on this group. We've also ensured a proper representation of civil society interests in our expert groups. In the hearings that we organize, we give them airtime on the various panels that we have when we have hearings, and the figures I can give you a few later. They are not bad, considering the structural imbalance between the level of representation from the industry on one side and the rest, if I may say, on the other side. The ratio is about 1 to 3 if you look at the transparency register. So 1 to 3, 1 for civil society, 3 for industry is the constituencies we have to live with, if you want. This is the kind of state that we face in this business. So we've also organized regular meetings, and I'm sorry to hear from Monique that it may be difficult to meet with our VP, Dombrovskis. I will certainly convey this message. I'm not happy to hear that, although I'm not responsible for this, as you may appreciate. But we in DG FISMA, and I'm sure everyone here would testify that, we do not refuse any meeting. Our door is open to everyone. And if we happen to meet more with industry than with consumers, it is not out of the deliberate policy, if you want. It's reflecting the number of requests that we receive. I can tell you we never turn down any request from the civil society organizations. And if we do, it's certainly because of agenda problems and not out of bad will on our side. I can ensure that. But having said all this, the situation is still not entirely satisfactory, seen from our perspective. For the hearings, we still have about a ratio from 2 to 1, industry 2, non-industry 1, attending our panels. But this is better than the state of nature, if you want, because of this natural imbalance between the constituents that we have to deal with. For consultations, we also receive twice as many input from industry than from civil society. And for consultations, as you may appreciate, we don't actually have much control of that. But that being said, recently we've improved the way we design our consultation processes. We've designed what we believe are much more user-friendly or reader-friendly consultation papers, which we if you want, which we draft differently depending on the group they are addressed to. And I will close my presentation with this. For the recent consultation we launched on personal pension products, we had about 580 contributions altogether, out of which 480 came from the civil society, men in the street, consumers, users. This is a remarkable figure. It's, we hope, a new trend, and it will certainly encourage us to design our consultations in a new way, and using also the social networks. This consultation was very much backed by a Twitter campaign that our colleagues launched, and the outcome is a much higher participation from civil society. This is very encouraging. I'm very happy to report that. It's not always as, let's say, flourishing or positive, but this is a good and recent trend which we hope will continue in future. I've got more to say, but I know there will be a second round of questions.
There will be a second round of speak, of course. Thank you very much. I would like now to turn to the end of the table to Myriam van der Stichele from SOMO, who's been involved in financial regulation since quite a while, and who has some experience of getting engaged as civil society organization, civil society movement in financial regulation, taking it from a less traditional end, let's say, than the experts. So, Myriam.
Yeah, I was thinking I would be at the end and kind of trying to go, why is it? You know, because I agree with what has been said, and it's absolutely a problem. I mean, also having been in an advisory group, you know, it's to be in a personal capacity, and then the presentations are, you know, with the logos of the banks, and the Commission doesn't intervene to say, sorry, this is your personal, it should be your personal view, for instance. But what I find very striking is that it was so difficult to make the links between the financial sector and the reality of what the impact is. And it was very clear in the impact assessments. If you look at the impact assessments of all the regulations, I looked at it, impact on society, 2 lines, no problem. Impact on environment, copy-paste, no problem. Third countries, what is the impact on the US? Yeah? This is very problematic. And that's why there was no effort and methodology to understand what the links are. For instance, we are trying to find out in the reality, you know, who is financing palm oil, you know, who are the financiers, how are they regulated, and, you know, these kind of links are not being made. And I think it's essential. The other essential thing is, what is the objective of the legislation? I looked at the preambles of 11 legislations that came out, and nowhere is it very clear that it, you know, that it is about stability, that it is to make sure that the financial sector is servicing also the needs of society, etc. So, and this is a different thinking, and I think as far as this is not kind of beyond understood, it's clear. For instance, on MiFID, when we started, you know, it was difficult to get into the hearing, to be in the panel, because we were saying it's about food speculation. It was like, oh, food speculation? Food price speculation. So it was very difficult to make those kind of links. The second thing, inequality of resources, they are really serious. I mean, we've done this report on the banking, the lobbying of the banking just in the Netherlands. To give you an example, ING is member of a national banking federation. Only its membership is 3 million. This banking federation has 12 million. And then they are based here. The other thing that we also did is to look at who is answering your consultations. You know, the whole list of all these lobby groups are here at the end of the thing. We looked at whether we went to the banks and we asked them, do you know that you have answered this consultation because you are basically 10 times answering?
And they basically didn't know they were members of those associations. So the responsibility of who is lobbying you and kind of asking who is being involved in presenting this position to you, because you're listening to them. Basically on the CMU consultation was, all these groups are saying we want this. Of course it was, because they are. So I think these are serious problems. The other thing we found out is that when the basic legislation is being done at the EU level, but there is nothing being explained, exposed, consulted at the national level. But it's our ministers who are doing quite a lot of things. So that's also one of the issues. For instance, in the Netherlands, we have really 1,000 people in a room to discuss about the banks and splitting the banks. And then there is EU legislation on splitting, basically separation, whatever you call it. And there's no kind of engagement in it. So that's kind of one of the issues. And the thing is also fine if you're open and say, our door is open and we're not able to come. But the other thing is you really have to go proactively to it. But what is the weighing? How do you weigh all these different inputs? That's not clear for the moment. I mean, even if we're there, we've been ignored. We know it with the CMU review and so on. But also, even if you make your choices and you choose not to weigh in some of these interests, how is the accountability being organized? Not only by the Commission, but also by the banks. And I can say something in the proposals about it. So I leave it there.
Thank you, Myriam. To continue, I would like to give the floor to Daniel Mügge, who will give us a perspective from academia and who's been researching a lot financial regulator and processes in the EU. So please, Daniel.
All right, thank you very much, Aline. I have the sense that we're discussing this report at a very crucial moment in European history. There seems to be a growing sense throughout European societies that the European project has been captured by a narrow elite, for right or for wrong. And as everybody can attest in this room, this movement that's sweeping Europe is very real. And I think in the coming 6 to 8 months, we will find out just how real, but I think Europe really is facing existential crisis. In the German media, Günter Verheugen, the former commissioner, was quoted just a few days ago saying, how many more wake-up calls do we need in Europe before something really changes? And I think what that means is that in 2016, engaging citizens is no longer optional. It has to be made to happen, otherwise it may very well sound the death knell for the European project. And what that means is, I think it would be really politically reckless to walk away from the challenge that is being put on the table here today. Personally, I agree with 2 of the key premises of this report. The first one is that in a day and age where the financial sector has, as it were, sort of like wormed its way into so many arteries of our lives and our societies, it has a footprint on the lives of European citizens that goes much further than the bank account that people have or the mortgage that they take out. It really does shape the way that European societies tick and affects many people's lives. The second premise of the report is that there's no reason to believe that markets themselves, whatever that means, can be trusted to manage that footprint well. And I think the analogy to many other economic sectors, say, for example, the energy sector is very clear, where the externalities, for example, in the form of the exhaust of carbon dioxide into the atmosphere, is something that simply cannot be easily included into the operating of the sector itself, and it needs public intervention to account for these things. I think the parallel with finance there is very clear. Now, if that is the case, then of course the big question is, so what is this broader societal footprint? And I think it's fair to say that many people, certainly in this room, have the sense that this footprint is real, and it's out there, and it's important. But the report so far is, I think for understandable reasons, still fairly short on concrete examples of what that footprint is. To say that my personal mortgage situation has something to do with the way that finance is regulated is one thing. It's very different to be able to point to an article in Basel III and say, or in the CRD4, to be able to say, this is the article that should have been changed in order to prevent excessive indebtedness of citizens in this or that other sector. And I think that is work that still remains to be done. But of course, as has been pointed out several times, that needs an enormous amount of resources. It's super difficult for an ING to figure out what it wants out of CRD4. It takes them just, what's the line between their bottom line and this regulation. That takes months and months of work. So how easy can it be to figure out what the impact is of that same regulation on the average citizen in Spain? That's an even harder task, and it really does require resources. But if we agree that that impact is real, and that it matters to citizens, it matters to our sense of justice, then somebody needs to go out there and make that happen. So what I would be advocating is that I think what we really need is a paradigm shift inside of the European institutions as far as their mandate is concerned. I think it's no longer good enough to think that we basically manage and regulate the financial sector, and yes, the door is open to others to come in if they feel that they have been influenced somehow by what's happening there, but to say that ex ante, the responsibility of people who are involved in regulating and legislating about the financial sector is to manage the whole societal footprint that the regulation has. Now, in 2016, many people may feel that that footprint is too large. It's probably too large, for the wishes of the ECB. It's probably too large for the wishes of the financial sector. How did we end up in a situation where Europe is so finance-dominated and is so dominated by loose monetary policy? Many people, I think, wish it were different, but that's the reality we face. And I think we can't walk away from it, but we have to own up to it. It's unfortunate, I think, that over the years, sometimes a sentiment has grown that there is some kind of inbuilt antagonism between people who work inside the European institutions on the one hand and advocates for civil society concerns on the other. Sometimes it feels, and wouldn't be surprised if some people also felt that that's the situation here today, that there is somehow, that there are enemies facing each other across this particular table. I think that shouldn't be the case. I think quite the opposite should be the case. I think there should be a feeling, and I hope that that's something that is one of the results of this conference here today, that with representatives of the institutions and representatives of civil society, that there are potential allies in this room. Allies in the sense of demonstrating that the policy that's being made here in Brussels can and will have to work in the interests of the citizens. To achieve that, however, I think it's essential that it becomes part of the DNA of the people who regulate finance, that it's their responsibility to manage the whole societal footprint and not just the narrow impact on the financial sector. I'll leave it there for now. Thanks.
Thank you very much, Daniel. I think you made a very important point, so definitely we'll take it from there. And I will like to give the floor now to Ella Sjödin from the Nordic financial unions, and then we'll ask maybe Eric Ducoulombier to have the first comment after this first round of discussion. But Ella, please, the floor is yours.
Right. Thank you. So I come from the Nordic Financial Unions, which is a trade union organization representing 7 national trade unions in bank and insurance in all the Nordic countries, and thereby representing 150,000 employees in the finance sector. Since the financial crisis, our organization has completely shifted focus. We used to be more an organization for cooperation between trade unions in the Nordics, but we transformed to completely being a lobbying organization representing the interests of trade unions and employees to be able to cope with the legislation coming. I think that we've had a very good dialogue with many European stakeholders. We've had a good impact, and we feel that we can represent a different interest, such as the right to whistleblowing, to high sales targets, the right to training for employees, employee participation, employee representation, and safeguarding collective bargaining. And we many times feel that European policymakers do listen to us. But this is, of course, that due to that we have been able to focus all our resources, the free staff at the Secretariat in Stockholm, on only working at this for the past couple of years. We have really changed our organization to building knowledge and completely being present only on EU level. So this has been a big change for us. And we've had the resources, and I'm fully aware of that most organizations do not. So I see that the 2 big obstacles are, first of all, the resources, and that meaning both, money, time, and staff for most organizations, and also the complexity. And for the complexity would entail both complexity of the regulatory process. It's very difficult and can be very intimidating to approach, and also understanding the financial system as such, which is a big challenge for many NGOs and civil society. So I therefore really think that it's crucial that European institutions and the European supervisory authorities, which has increased again the complexity, really take our interests into account, of course, and acknowledge that their legislation, of course, will have an impact on employees, on consumers, on society. I know that the report focused especially on the public consultations. We have responded to, I don't know how many consultations during the past couple of years, and I would say that the format is also very challenging for us. I'm happy to hear that there might be changes in the format. I haven't been so lucky to experience that yet, but hopefully when you respond to consultations, you feel that they're usually only directed to industry stakeholders, and I think that makes a lot of organizations hesitant to even respond to them. Also, continuing on consultations, I think that when the Commission or the European supervisory authorities launch or publish these consultation summaries, the reply summaries, that they also include the responses from the civil society, even if we're not in majority. But that at least shows that, you know, there are other diverging opinions, or they have at least received our replies, which is not always the case. I'm thinking now especially about the call for evidence, I think it was this year, where I think it was recognized in the summary that there were responses from other actors, but I don't think anyone referred to any response from an NGO or a trade union, and we were not represented on the panels either at the public hearing. And I think that's very problematic and sends a bad image. So I think that many EU institutions and policymakers do listen to us, but I think that they should really see us as an asset and use the expertise that we bring to the table, because we do have a completely different perspective. We have different knowledge, which should really be considered. So, thank you.
Thank you very much, Ella. So I think we heard a lot and from different panelists here, and I think it's really important to give the floor to Eric Ducoulombier for the European Commission to have a first reaction on all that you heard, because there are a lot of comments. In particular, I was thinking that this issue of how responses and input is being taken into account by the Commission and how to make this improve. The impact assessment also seems to be an important one, as well as the possibility to organize participation, so from the Commission to civil society organization, and support their active participation. And maybe it would be interesting to hear from you also about this idea dropped by Daniel Mügge about a paradigm shift, and this real need to create more bridges, alliances between public institutions and civil society organizations, which we heard also from other comments. So I will let you comment a few minutes on that.
Thank you very much, Aline. Yes, a lot of comments have been made, and I liked the sentence I just heard. That you, Elia, you said, see us as an asset. That's what we do. We do see you as an asset. We're not like people in the room to believe that because we may hear more often, because it's more powerful, the voice of industry, that we would give, if you want, a flavor in our text, which would be more favorable to industry. We are here to represent the European general interest. This is our raison d'être, and this is what we do all the time. We do not naively give more weight to the most powerful or the most vocal or the most resourced. We don't do that. We strive. This is our DNA to follow and pursue things in the general interest of everyone in Europe, citizens, industry, trade unions alike. This is what we are here for. It is not always possible to give, if you want, space to everyone in hearings we organize. We appreciate that. We have to make selections. These are difficult choices. We try hard to have everyone present, represented in these hearings, whether as panelists or as attendants. I've got all the figures, I've got all the cases here, and we are probably not doing ideally as much as you would wish, but it's not bad. It's certainly not as worse as sometimes people fear it is. On impact assessments, this is a fair point. This is something we've tried very hard for years to improve, especially with our new better regulation agenda adopted by the Commission in 2015. And part of this is improving impact assessments. We published now the draft roadmaps on impact assessments. We seek feedback on them from society. We do not receive many responses to these kind of consultations or these kinds of call for feedback that we launch. Maybe the habit is not yet very known, but we do publish a lot of our draft ideas for feedback, including impact assessments. But I take your point that maybe some of the impacts are not sufficiently measured in these impact assessments, in particular the impact on society. This is a well-known problem which we are always trying to improve, but at least we are fully aware of this. Difficulties to be heard, difficulties to be taken into account. We've been ignored, I heard. This is something I'm really sorry to hear. That being said, and I think everyone will understand that we cannot take all views into consideration. We have to, at some point, sit back, reflect, having received all the inputs, all the views, we have to make choices, and these choices never please everyone. They cannot. But there's one thing I would like you to think about. We've taken, since 2008, almost 40 EU legislations to remedy the problems met or identified during the financial crisis, about 40. And we've been heavily criticized by the financial industry for these 40 measures. That probably is somewhat a good sign, that we've probably hit where it hurts. We have not been applauded, and probably what many of these companies would prefer is us undoing things. We're not going to do that. Call for evidence will not be us undoing what we've done a few years ago. So this is something, of course, you have to bear in mind. We are trying to hear everyone's voice. We cannot take all them into consideration, but we are giving them the same level of importance. It is not because there are voices that carry less, because they are, less used to participating in this game. It's not because of these voices carry less that we will give them less importance. This is something I really want to stress. So, last thing, the responsibility of member states. I think, yes, you're right. I mean, we are only the European Commission. We expect when there is a national debate on the EU topic, we fully expect this debate to be solidly, robustly managed by the member states, and we expect, of course, solidarity on our collective projects from them. You mentioned the structural reform of banks. It is a proposal that the Commission has tabled, and it is not our fault that it is not yet a piece of EU legislation. We've tabled it. We've been robustly defending it. But for the moment, the European Parliament, representing the people of Europe, hasn't come to terms with this proposal. So, I mean, things are complex. Things have to be analyzed in depth, and everyone has a responsibility in the shortcomings that have been very rightly identified around this table. Thank you very much, Ali.
Thank you. We will now have a second round of comments to react on what you heard, to maybe highlight your key proposal to unblock participation. I would like to ask you to keep it short so that we still have a bit of time for questions from the room. So maybe who would like to start with these comments? Shall we start from the end of the table? Yeah, and go back?
Yeah.
Yeah?
Okay. I'll try to be short, but it's true that because, I mean, this report is at the end of the table, I was really thinking what could be kind of advised. And I think there are different levels that we can think of, because our Ministry of Finance also wants to be independent, but they are so much kind of in touch with finance all the time that, you know, their thinking is kind of different. I think one of the levels is that after the crisis in 2008, there were 100 NGOs coming together, and they really had an alternatives of what needed to be done. But this was more at the principle level, you know, closing the casino, etc., etc. And what we saw is that afterwards the legislative process went immediately into the detail. I would say one of my proposals is the willingness to kind of discuss the principles. And we do that in our consultations when we respond. We first say, look, what is it for? Who is going to win from this? Why is it important that, you know, the profits go there and there? This is kind of a willingness to go into this discussion, and together with civil society, this is your principle. What might it mean in regulation? For instance, financial stability is a public interest, but for whom for the moment? You know, it's not kind of in everybody's interest. I would also say that done very kind of down to earth is really other ways of consultation. You were saying everybody can come to the hearings, but there are no quotas. I mean, you should have quotas on who is sitting on the panels, who is coming, etc., etc. I think a legislative footprint, you know, when you make a proposal, that you really say who has been talking to you. That's being kind of accepted already by some of the parliamentarians, and also making sure that the transparency register is really kind of correct. Because I looked at what the Dutch banks did, and it's not sufficient. And actually, they don't know what their budget is for lobbying. It's really shocking, to be honest. So I would say also, fine if you have more and more contributions, but what we see in the US, for instance, that more and more contributions also lead to a delay in kind of the proposal. So it should not be used as a tactic to kind of delay other kind of things. So I would also say, if NGOs come with a proactive agenda, how are you going to deal with it? Because we did put sustainability on the agenda in 2010, for instance, but there was no way we could go with a proactive kind of agenda to the Commission, because we have to react in the consultations. So I leave it there.
Ella.
Yes. I would first like to highlight in the report the proposal on more collaboration between the civil society, which I think is a really good and important way to start. I think that us in the civil society, in trade unions, can definitely strengthen and improve our knowledge sharing and information sharing. I think that knowledge is, again, key for most of us. And here I would say that Finance Watch plays a very important role, both as a facilitator for civil society organizations and trade unions, where we can meet and actually share knowledge. But we have also used Finance Watch a lot to get knowledge, to understand what's happening, to understand different files and so. So I think this is a good way. But also for civil society, I think it's important to increase knowledge not only about finance, but also about the EU, about the whole EU regulatory system, and how you as an organization can work to have an impact. So I think there's much more room there to develop this cooperation and knowledge sharing. And I don't think that we always have to agree either within the civil society, just see how and when we can work together. And then regarding the regulatory process as such, as I said before, I think the consultations here is key. Change the format again so that more organizations feel that they can actually respond to them. Don't make them so intimidating. Make sure it's not only ticking boxes, even though it's easier for the people working at the Commission, of course, but it's important to get the information through for the organizations. And also, I mean, when we reply to a consultation, it's not the opinion of the 3 of us working at the Secretariat in Stockholm, but we're also representing 7 other trade unions around the Nordics. And I think many of the organizations active on EU level represent very, very big groups around Europe. And I think that's important to remember as well. And already talked about, I mean, the expert groups, of course, include more representatives from different interest groups. Same with impact assessments. I think we've already discussed here, include more aspects, because the legislation, again, will have an impact on employees, on consumers, on society. And I think this has to be taken into account. And I think we are all very happy to help the European policymakers to make this impact assessment. Thank you.
Thanks, Ella. The question on the table is what needs to happen. And I think that the high-level expert group on sustainable finance that has been set up, I think, is an excellent example of the step in the right direction. That's exactly, I think, what needs to happen here. At the same time, I think we should not kid ourselves. I think there are limits to participation. We should not kid ourselves in thinking that the direct impact that something like the Prospectus Directive has on gender equality is ever going to be front-page news, and that we will have sort of like a broad-based citizen movement that tries to rectify all the wrongs that are in that directive from that perspective. That is not going to happen. And I think in general, we're kidding ourselves if we think that somehow, we'll have from the very grassroots sort of like a groundswell of popular sentiment and interest that will somehow sort of come here to Brussels and knock down your doors. If we say that that is what needs to change, I think we'll be waiting for a very long time. That is why I think the key is to flip the whole perspective around. If I am a commissioner or a minister in a national government responsible for infrastructure, and I'm thinking about whether I should build a new rail line or rather a highway, then part of the whole policy process will be automatically from the inside, from the outset, that I ask the question, what's going to be the net environmental impact of option A versus option B? That's part of my DNA that I ask that question. And I think it needs to become part of the DNA of the European institution to ask similar kinds of questions from the outset. Not waiting until somebody comes and says, oh, by the way, I think what you're doing over there and have been doing for some years might have an impact on gender equality. No, to ask at the very first moment, okay, we'll be asking ourselves, is there an impact there? And that's going to be hard, and it's going to be tough, and it's extremely complicated, as we've heard many times, but I think it's unavoidable, because the alternative, just waiting for somebody to knock on your door, is not something that will really ensure that all the societal footprint will be taken into account. Now, what are those footprints? What I would like to see is basically targeted thinking on this footprint in basically 3 different segments. The first societal footprint of what's being done here in legislating and regulating the financial sector has to do with financial stability and the distribution of the downside risks throughout society. As you mentioned earlier, a lot of that, I think that has been heavily discussed, heavily addressed. This is about too big to fail. This is about the banking union separating sovereigns and the responsibilities effectively of taxpayers to the financial sector, trying to pull those apart. I think a lot of very good work has been done on that. I think there are 2 other dimensions that have received much less attention, even though they're equally important. The first one is the importance of the way that the financial sector is structured on the allocation of credit throughout our societies and the European continent. And certainly in times of loose monetary policy, of course, where credit is sloshing around our economies like never before, where it ends up, whether it ends up in places where we want it to end up, is of course a crucial one. Now it's easy to say, well, that's not really what we're about, and we don't want sort of like top-down allocation of credit. We don't do that anymore. But we're doing that effectively with the way that we're setting up our... We do that anyway, that we structure things in a way that will either channel loads of credit over here or loads of credit over there. So I think actively managing that, picking up that gauntlet and saying, okay, we have a responsibility to manage our own footprint is something that's unavoidable. And the final dimension of that impact is what some people have referred to the social effects, the social side effects of increasing financialization. The way in which the financial sector has penetrated our everyday lives, whether that's thinking of payment systems or how real estate markets have changed through the big availability of mortgages or many other kinds of ways, is something on which research has started over the years. There are people out there thinking about this kind of stuff. What's the impact of fintech on your and my personal lives? But again, I think we still have way to go when it comes to taking up that challenge throughout the regulatory and legislative process, and having people in the Parliament and the Council and the Commission, everywhere else, ask themselves, when we do this or that with a particular regulation, how is it going to affect citizens' lives? Because as we've been seeing over the past 10 years, what happens in regulation or doesn't happen has a huge impact on our lives. I think it's time that that be acknowledged and managed well. Thanks.
Thank you. Monique, if you want to follow on.
Oh, yeah, sure.
Thanks a lot. I try to keep it short. Very, very many interesting comments. Just to reassure, if needed, Eric, I think that the remarks are not necessarily focused on FISMA. It's the Commission as a whole. It's also the authorities, the ESAs. So it is not about legislation only. It's also about implementing and about enforcement. And just to look, and there I think there still needs really, there is like an awareness that has been raised. Also with the ESAs, there is much more outreach to the, let's say, civil society bodies. But still there is a lot too much, can I say, politeness towards the finance industry. Look at another sector, and this is just scandalous for the people. Volkswagen, blatant illegal behavior, both at EU and at national level. Nobody acts, just staying polite. And this has also been the case in the financial crisis. People are just scandalized that they can get away with it. So it's important. Then when you say there is no cozy relationship with the bankers, I certainly am sure that there is not like a queue of bankers every morning at your office, but still there is a language that is being used that really creates a suspicion that there is a cozy relationship. I mean, I think I'm an educated citizen. When I go to a meeting with the ESAs, after 20 minutes, I'm lost in acronyms. Change language is also very... Sorry? What's an ESA? Good. I thought you knew. Should I really say that? European Supervisory Authority. But it's not said that it's in the financial sector. I also believe that when you want to change the paradigm, I agree with that, you also, from the consumer perspective, should change the regulatory model. Because for the moment, and that's really playing in the hands of the banks, it's all about disclosure. Inform the consumer more, and he will be able to make the best decision for him. No. You have to have the courage to go into product intervention. That's much less comfortable for the banks, but that's what people need. People don't need more information. They don't need more choice. They need better products. So that's very important, and that's a change, a shift of mindset. You speak about an open door policy. I totally agree with you. I think that most of the times, except for your vice president, but maybe he's a too busy person, but tell him. I think really we have to go to the next level, like Mario Bros. It's really something that needs to be done. We need to be creative in identifying, not only for financial services, but overall, for expert groups in the Commission, in the European institutions, a way of funding civil society expertise. And there I would disagree with Daniel, because I think that, yes, you have to ask the other questions in the impact assessments, but it's not the Commission who should give the answer, because they don't know. I mean, it's the experts of civil society or of the industry that knows. And for the moment, we are facing an era where independent expertise is not really very much available anymore. And we need to finance, to some extent, at least contradictory expertise. And this is something where, for example, in the UK, the consumer body, watchdog, in the area of water, energy, and postal services for a long time has been financed by levies on the industry on the regulated industry. So that's maybe a way forward, even if it's very creative. I mean, when you put this at the European level. And I agree with public consultations. I think that there is some sort of a paradox at European level, because if there is a huge civil society response to a public consultation, like in trade, in TTIP, there is nervousness, because then they say, oh, maybe it's just a copy-paste, so manufactured opinion by some of those activists. So I think that civil society response to public consultations should be taken more seriously as it is now.
Thank you, Monique and Magda. I will give you a few more minutes and then return to the room.
I only need a few seconds. Well, as I do not have the opportunity to put forward the very clear messages that came from our research, I will try to stick to that and not necessarily give my own opinion. Well, I really like the idea that Myriam expressed, accountability and how it is organized. For participation, it's very important to be aware, for organizing participative spaces, it's important to be aware what is the framework in which you work, what is the accountability framework in which you work. To whom are banks accountable? And as I said, one very clear message that came from our report was that citizens want their relationship with banks to be intermediated by a legislator, be it the state, be it the European Commission, but you cannot let banks do whatever they do now, because it's clear that they will never give better financial products, they will never empower people in terms of transforming them into financial literates or so on. So we need to think of that, and we need to think how we can organize participative spaces within these accountability frameworks.